Hey everyone, welcome to today's The Steady Trader video. Well, today we're going to cover part 3 in our options series, and we're going to talk about options for income. This is what I call the pro strategy. This is the smart money strategy. This is the strategy that I've now done for, I want to say 17, maybe almost 18 years. It is the most consistent strategy, and it's been making me about 1 to 3% a month. Not kidding, okay? And it has to do with being, as opposed to an options buyer, being a smart money options seller. There's a very specific way in which this needs to be done. I'm going to go over the basics of it right now. I'll be doing a special webinar of this in the last week of June, so stay tuned for that. So this option selling strategy, this smart money strategy, is something I'll be covering, I'll say it again, in a special webinar at the end of June. For right now, let me give you a bit of an introduction. So for the most part, retail traders, and I call them chart chasers, they tend to be buyers of options, and there absolutely are plenty of times and opportunities when buying options makes sense. However, the strategy that I like to apply from an income perspective, and it has been more or less making me anywhere between 12 and 30% a year for many years, is when you're an options seller. But option selling can be very tricky unless it's done correctly. For the most part, what I'm seeing what people do is they're way too aggressive and way too risky when they're selling options. Option selling has to be done conservatively, just like options buying should be done. So let's have a look at the charts, and I'll show you a very basic and simple concept of this. So let's start off and have a look at a trade that I just closed I guess 2 days ago. Here's the actual stamp. You can see exit date, entry date. I'll show you what the trade is in a minute. In Disney, we made 12.5%. Here's the actual idea of what it entails. Okay, so if you're an options seller, you're making a distinctly different bet than if you are an options buyer. So here we're looking at a chart. It happens to be the share price of Disney, which again, I'll show you the trade that we did here in just a few minutes. But what you're seeing is in early June, specifically on June the 7th, we made a bet that Disney shares are not going to go much lower than the strike price of $97.50, which is about here where I put the blue arrow. The stock at the time was trading around here, okay, about here. So this is where the stock was trading at the time. We were not saying that the stock has to rally. We were simply saying it's not going to drop at that point in time another approximately about 5% against us, because we have a little bit more room to the downside. So we were simply saying that, you know, even though we think the stock may go higher, that wasn't our bet. We were simply saying it's not going to drop another 5%. Now I want you to pause the video for a minute and think about what we just did. This is what smart money investors do. I know that because I work with them very closely, and this is the strategy I help them implement. Instead of making a directional bet, right? In which case, if you buy an option, you buy a call spread, in which case the stock has to go higher. It must go higher or you will lose money, right? We simply made a bet that it's not going to drop another 5%. We had the same thought in mind that the stock might rise, but we're giving us a tremendously much better reward to risk. Or a sort of risk-adjusted return, if you will, by simply saying the stock's not going to drop more. So what we did on the 7th of June, and we did send a real-time trade alert for this. We sold an option spread using the you can see the August puts short puts where we sold 97 strike 50 put, bought against it 92.50 put. The stock ended up actually rallying quite nicely. Didn't have to do that. It could have just gone sideways or even gone against us, and we could have still made money. But in this case, it did rally. I'm just showing you this because it's the last trade, the latest trade we just closed, right? And you see we closed it here on the 13th, which was a couple days ago, and we made 12.5% in terms of returns. So again, I want you guys to think about, I want you guys to start thinking about what it means to be a risk manager, right? That's what this is all about. Being involved with options, being involved with the stock market, the commodity markets, the interest rate markets, anything like that. It's all about being a risk manager and not a reward chaser. Good hedge funds, good private investors, any successful market participant is a risk manager primarily and not a reward chaser. So with this strategy, and again, I'll hold a special webinar at the end of June. You guys will receive an invite, so stay tuned for that. Wait about another week and a half or something like that, and you'll get the invite. We'll talk about this in very great detail. I'll show you exactly how we do it. I'll show you a tool that I use to find these trades. But I want you to think about this. Again, it doesn't mean that you cannot be buying options or buying call spreads or put spreads or whatever you do on the long side of options. But I'm telling you, if you want to generate income, option selling is where it's at. With that, I hope this 3-part mini series on options was helpful. Wish you guys a great weekend, and I'll see you next week. Take care.